Hello everyone, in today's video I'm going to be talking about how you can make money from an upcoming event that happens around every 4 years, and it will make millionaires. Those in the know will make a good chunk of money from this, and you could too. I make these videos to show you real ways on how to make money, whether it be regular daily income, making money online or passive incomes, and to find tried and tested methods that will increase your financial well-being. If you're interested in making multiple incomes, then hit the like button, subscribe to the channel and hit the bell to be notified of future videos. Today we're diving into a hot topic, making money from an event called Bitcoin halving. So let's go. First things first, what is Bitcoin halving and how can you make money from it? New Bitcoin is constantly added to circulation through a process called mining. This will continue until the full amount of Bitcoin allowed has been created, then no more will be added or mined. Approximately every 4 years, the reward for mining new Bitcoin blocks is halved, hence the term halving. This event reduces the rate at which new Bitcoins are created and is designed to mimic the scarcity and value retention of precious metals like gold. In other words, each year new Bitcoin are produced that can enter circulation. The rewards for people to create it, also called mining, are halved approximately every 4 years, which then in turn means there will be less Bitcoin available as demand increases. It's a bit like mining real gold. As more of it is mined, then there is less left in the ground and it becomes scarcer, so prices will go up. Past halving events have significantly impacted Bitcoin's price, leading to speculative increases in price. But why? It's simple, supply and demand. As new Bitcoin becomes harder to mine, its scarcity increases, often boosting its market value and driving up the price. This Bitcoin halving takes place around every 4 years, and guess what? Another one is coming soon. Historically, Bitcoin has undergone multiple halving events since its inception. The first halving was in 2012. This was followed by subsequent halvings in 2016 and 2020, which further reduced the rewards to mine Bitcoin. Understanding Bitcoin halving is crucial for investors and enthusiasts as it plays a pivotal role in Bitcoin's economic model. The halving events not only affect the rate at which new Bitcoins are generated, but also have historically been correlated with periods of increased price and market interest. By design, these events create a deflationary pressure, enhancing Bitcoin's appeal as a digital gold and fueling debates about its potential as a long-term store of value. As the cryptocurrency landscape continues to evolve, Bitcoin halving remains a key event to watch, offering insights into the dynamics of supply, demand and market psychology in the world of digital cryptocurrencies. Analysing past halving events provides insight into their potential impact on Bitcoin's price. As you can see from this chart, in the year run up to the first halving in November 2012, the Bitcoin price increased by 385%, and in the year after the halving it increased a further whopping 8,069%. In the run up to the second halving of July 2016, the price increased 142% and by a further 284% in the year afterwards. The last halving, which happened in May 2020, saw the price increase by 17% in the run-up and a further increase of 559% in the year after the halving. These price increases post-halving can be attributed to several factors. Primarily, the reduced rate of new Bitcoin mining creates a supply shock. With the demand for Bitcoin remaining steady or increasing, this supply reduction often leads to a rise in price. Also, halving events tend to attract media attention and stimulate public interest in Bitcoin, potentially driving demand even higher along with a higher price. The next Bitcoin halving is in 2024. This represents a huge opportunity right now. But wait, the halving in 2024 could be even more interesting because there is another factor that is going to potentially increase demand and make Bitcoin supply even more scarce, and therefore drive the price even higher. Institutional investors want to get involved in investing directly into Bitcoin, as they have also seen the opportunity. Several companies have submitted applications to the US Securities and Exchange Commission, otherwise known as the SEC, for something called Bitcoin Exchange Traded Funds, also known as ETFs. These are big fund pools where investment companies can purchase Bitcoin as an asset to go alongside their stocks and shares and property funds. As of late October 2023, the SEC had about 8 to 10 filings under consideration. Among these, Cathie Wood's ARK Invest application was notably at the forefront, with its 240-day SEC comment period set to expire on January the 10th, 2024. In addition to ARK Invest, other firms with pending application for Bitcoin ETFs in the US include BlackRock, Bitwise, WisdomTree, Fidelity, and Invesco. These applications signify a growing interest in offering exchange-listed products that provide direct exposure to Bitcoin, contrasting with the previously approved ETFs tied only to Bitcoin futures contracts. If approved, these funds will buy significant amounts of Bitcoin. Just for reference, here is a chart of how much money these firms have in their current funds that they manage. BlackRock has over $9 trillion in its funds, Vanguard has over $7.5 trillion, and Fidelity has over $4 trillion in theirs. If they start to buy Bitcoin, then they will buy huge amounts, which will drive up the price. If you combine this with the halving activity, then the next couple of years in Bitcoin are very exciting. People will likely make millions of dollars. Some forecasters are saying they believe that the price of Bitcoin will exceed $100,000, and it currently sits around $36,000. Remember that after the 2020 halving, Bitcoin saw a high of $64,000. So, what are some of the strategies that investors use to make the most money from Bitcoin around a halving event that you could follow, and how do they reduce the risk? First one is pre-halving accumulation. Buying Bitcoin before halving. Investors often purchase Bitcoin in the months leading to a halving, anticipating a rise in its value post-event due to the reduced rate of new coin generation. This strategy relies on timing the market, requiring careful monitoring of trends and sentiment. Secondly, diversification and asset allocation. While focusing on Bitcoin, it's wise to diversify with other cryptocurrencies and asset classes. This helps mitigate risk, as the crypto market can be a bit unpredictable and other assets may not react similarly to Bitcoin's halving. Third, the post-halving strategy. After the halving, closely observe the market's reaction. If there's an increase in value and price, investors might decide between holding for potential further gains or selling to realise profits. A post-halving dip could present a buying opportunity for those confident in Bitcoin's long-term prospects, and they can reinvest for the next price rise. Number 4, risk management. Clearly define your investment goals and risk tolerance. Is the focus on short-term gains or long-term investment? Number 5, stay informed. Stay updated on Bitcoin and broader market trends, as these can influence investment decisions. So as you start to decide what you're going to do, just remember, we are heading into the next halving and the price has recently started to increase as people start to buy Bitcoin ready for 2024. The institutional investors like BlackRock are again looking to get involved further and with bigger amounts of money. Just like institutions did around the 2020 halving and drove up price, so it is the same now as we approach 2024. Confidence in cryptocurrencies will continue to grow as governance is introduced to regulate the market and make it safer to invest. And finally, the media coverage of the institutional involvement and the halving event will attract more investors that will likely increase the price. Looking ahead, the anticipation surrounding future halving events, coupled with Bitcoin's growing mainstream acceptance and the increasing involvement of institutional players, suggests a continued interest in this digital asset. However, don't forget the speculative nature of Bitcoin, and the cryptocurrency market means you should take a cautious approach. You should be well informed, diversify your portfolio, and be prepared for volatility. The Bitcoin halving event offers potential for making good returns with your investment, but as with all investments, they can go up as well as go down. A comprehensive understanding of the broader market dynamics, a clear investment strategy, and a balanced perspective on risk are essential for navigating the complex and evolving landscape of Bitcoin investing. That said, this potentially represents a good time to think about building up your Bitcoin portfolio. So, I hope you've enjoyed today's video and got a lot of value from it. If so, then please hit the like button, subscribe to the channel, and hit that bell to be notified of future videos. And I'll see you in the next video.